We're going to start with a format. If anybody's watched ESPN and the Pardon the Interruption format, we're going to use that approach right now. And a gentleman that oversees our America's Global Expansion team, Mike Haralambakis. It just flows right off the tongue. But from an international perspective, a Greek gentleman, studied government at Harvard before he came to Google, worked at FEMA. So as it relates to if we have any emergencies today, good news that Mike's with us. And he's going to facilitate the conversation with Professor Mauro Guillen, make sure that I say it right, a Spanish gentleman. So again, we've got at least 2 countries covered. And to talk a little bit about Mauro, because I think he's uniquely qualified for this conversation. Director of the Lauder Institute at the University of Pennsylvania, professor in international management at the Wharton School, and professor of sociology at UPenn. His current research deals with internationalization of the firm and the impact of globalization on organization patterns. Awesome. And his recent books include Emerging Markets Rule, love that, and Global Turning Points. So 2 gentlemen come up on stage to have a conversation in front of you to hopefully impact your go-to-market strategies in export. Have fun, guys.
Thank you.
Yes.
Good afternoon, everyone. We are especially privileged to have Professor Guillen with us today. Jay spoke to the Columbus Continuum this morning and the idea of evaluation and needs assessment and executing. And I think there's no better person than a global economist and an expert in international management to be with us here today to sort of stitch all of that together and to give you guys some really actionable bite-sized nuggets as you consider the next steps of your journey. So delighted to have you. Thank you for joining us from Philadelphia.
Thank you for inviting me.
Jay spoke to the format and what you may have experienced on ESPN, but let me just run it down for you very quickly. We have 13 topics, which you will see momentarily here on the screen. We will be spending 2 minutes each on each topic. We have Eugenia here to my left, who's the gong enforcer. So we're going to make this fun and engaging. At the 2-minute mark, she will give that gong a good whack. You want to give us a test run? You got to go louder than that. There you go. OK. And at the 2-minute mark...
That's very gentle, actually.
I know. I think the intensity might pick up as we move through some of these questions. But in any case, so it's 2 minutes per question. That'll get us to about the 35-minute mark. And then we want to leave the remaining time for Q&A from the audience. We have mic runners. I do ask that if you do have a question, just identify yourself by name and what company you're from, and please ask away. So is everyone ready to go?
Ready.
You ready?
I am ready.
OK. Let me cue forward here. First question, since we have people seeking to grow their businesses internationally, is can you help us understand the primary reasons firms succeed or fail in global markets?
Yeah, so I guess I would mention 2. So one is that they frequently assume that all markets are the same, right? That's the first one. And the second one is that they frequently assume that all markets are different. Let me explain, though.
Please.
I mean, the trick is to strike a balance between the 2, right? So no market is the same, but at the same time, markets have commonalities. And there are certain types of customers that are present in different kinds of markets defined by national borders. So I think the successful exporting company, but just in general, the successful international company will be one that strikes a balance depending on the circumstances, right? I mean, that's where where you see which companies do better than others. I mean, the really important thing is to think about what is it about the market that is peculiar, right? And use that as a constraint, but then think about what kinds of things can I do the same across markets so that you can economize on costs, so that you can learn, so that you can transfer that knowledge across markets. So once again, it's the balance between the 2 that I think is going to give you a better chance of succeeding.
OK. So if we look at that from a sort of a micro-level standpoint, when you think about the marketers in the room and actually connecting with customers, what is some of the advice that you would offer to have a meaningful connection?
Yeah, so again, I mean, there are all sorts of customers out there. And even the same type of customer may have slightly different preferences or slightly different sensitivities towards price or whatever it is across different markets. What I think is really important is to understand how the lifetime value of a particular customer, how important it is to the firm. So not think only about the present time, but rather think into the future. How much value can you generate for that customer, right? And is it a customer that you want to serve? Is it a customer that you want to have, right? I think that is the best approach. And once again, what you need to understand is exactly what you need to do differently in that market, but also keeping an eye on what you need to do exactly the same for all of those similar types of customers, regardless of where they are located around the world.
Good. So segmentation is key, and really being able to identify.
Yes. So I'm glad that you brought up that term. It is the key concept that I think everybody needs to keep in mind, right? When being successful in global markets. That is to say, segmenting the market is really important so that you can identify the customers that are worth your while, right? So not every customer is going to be profitable for you, but you need to identify the ones that over their lifetime, right, will be profitable.
Great. We've seen recently the US dollar sort of reflex its muscle. Mm-hmm. And in fact, I was in Mexico a few weeks ago, and I had Mexicans and Canadians commenting how much further the US dollar was going right now. And we do have a strong representation of Latin Americans and Canadians in the room. But let's start with looking at the dollar, and how should exporters in the room think about export in relation to a stronger dollar?
Yeah. So obviously, currencies and their fluctuating values are a major headaches for any company that produces, in one place but sells in another, right? Or every company that essentially has its cost base in one currency area, but then has customers in another area. This is a perennial problem. This is a problem that every company that exports from one place to another has to deal with, right? And the trick is to think about the following, which is that currencies go up and they go down. Right? And it's very difficult to game, the market. You obviously would prefer to take advantage of, your customers' currencies becoming stronger relative to your own, right? And unfortunately, that is not happening now if you are in the dollar area. However, if you are, in the United States, if you are in Mexico, if you are in Brazil, if you are in Canada, and you're selling into the U.S. market, it's better times, right? But my point is that no matter where the currencies are or the future evolution of the currencies might be, you have to have a plan, a strategic plan. And you cannot make that plan dependent on currency fluctuations. Yeah, because then you're not in the business of providing certain types of services or selling certain types of goods. Then you become a currency trader, right? And that's not what you're supposed to be doing, right? So having said that, once again, there are ways in which you can anticipate these changes, ways in which you can protect yourself against those changes. There are also ways in which you can structure your operations in such a way that you limit or you minimize the effect of those fluctuations. But you cannot just have a strategy that is all about the fluctuations in the currencies. I mean, you have to stick to what your business is, right? And then consider the currency fluctuations as one source of risk among many, right? If it were the only source of risk, then that would be great.
Sure.
But unfortunately, it's not the only source of risk in international markets. But it is one that we need to pay attention to.
We have seen a fair amount of global volatility over the last 6 to 9 months, particularly in the markets, and some destabilization in China. Related to this, there's also been speculation. We'll keep going with this. There's been... Yeah.
There's something...
The gong can be overruled, let's be clear, okay? There's been...
So she strikes it every 2 minutes, no matter what, right?
Yeah.
No matter what I say or what you say.
Yeah, that's
okay,
how it works.
That's the way it works, okay, all right.
We are beholden to the clock.
Okay.
There has been speculation that we might see an increase in U.S. interest rates again in 2016 under the Federal Reserve of Janet Yellen. What's your perspective on not so much whether or not we might see that, but what impact that could have, again, on those who are exporting?
Yeah, so first of all, the dollar is a peculiar currency, right? Because the dollar is not just a means of payment, but it also happens to be the most important currency in the world in terms of trade, right? So like more than 90% of the trade in the world is invoiced in US dollars. And not only that, it's also the most important reserve currency. Sure. So when companies or individuals or governments accumulate wealth, they prefer to keep a large chunk of that wealth into US dollars. So there is this, in principle, this very, very strong underlying trend for the dollar to become more valuable, right, over time. But of course, it fluctuates, and it fluctuates among other things depending on how the U.S. economy is doing. So right now, the U.S. economy is projected to do much better than many other economies around the world. So that means that the dollar will probably appreciate. And then the other important factor to keep in mind is the one that you mentioned, which is interest rates in the United States. So unlike the European Central Bank or the Bank of Japan or the Central Bank of China, the Fed in the United States over the next few months is likely to raise interest rates, definitely not to lower them, right?
Sure.
So that's also going to, right? And then the last factor has nothing to do with the United States, but has to do with turmoil around the world. Whenever there is turmoil around the world, then people look for a safe haven. Investors look for a safe haven. And normally, the U.S. is perceived as being a safe haven, right? Regardless of the politics in Washington. So the thing is that, all of those forces right now are conspiring, they're all moving in the same direction. And what you're having is a steady appreciation of the dollar relative to many countries, many currencies around the world.
Good insights. You gave us a teaser about Washington. We will come back to that.
A little bit later.
A little bit. I'm sure people have that top of mind. One more follow-up related to currency. 2012, this is for our Canadian friends in the room. 2012 is about 1-to-1 ratio between the Canadian and U.S. dollars. Now, for every U.S. dollar, you get 1.3. It's about 1.3 Canadian dollars. How can a depreciation against the U.S. dollar benefit Canadian exporters?
Well, Canadian exporters, selling in the U.S. market or in the dollar area, right? Because there are other markets around the world that, peg or more or less, peg their currencies to the U.S. dollar. You're going to see a windfall, right? I mean, essentially, your customers in those countries, including the United States, are going to have greater purchasing power, and you're going to be able to perhaps be more competitive relative to other firms that don't have that advantage at the present time. But again, what I would emphasize is that may be a passing advantage, right? In 3 years from now, perhaps we might be having a very different conversation in the sense that the Canadian dollar, again, becomes more valuable. And if you're only relying on the exchange rate advantage, then at that point you're going to suffer a lot, right? So enjoy while it lasts, but by all means, don't make your entire business strategy, especially when it comes to foreign markets, revolve around a particularly beneficial exchange rate situation at the present time, right? Sure. You have to have a sound strategy for operating in these markets, regardless of what the value of the Canadian dollar is relative to those countries' currencies.
Yeah, great insight. So have a strategy, be flexible, but stay relatively disciplined to that strategy. All right, let's pivot away from the dollar. In getting to know each other over the last couple of months, we've talked quite a bit about demographics, and Jay mentioned in the introduction that Professor Guillen is also a professor of sociology. So let's look at cities and demographics and the impact that they have on firms and how they appeal to customers. Let me throw out a couple quick facts. Currently, 1.5 million people move to cities each week. And by 2045, we expect that the number of people living in cities will increase by 1.5 times to 6 billion people living in cities. Right. Profound impact on waste management, government, commerce, how business is done. We talked about security, even internet security, even day-to-day security. Give us a sense of how to think about that and how firms can be competitive not only in their local cities, but also in global cities. Yeah, so as you just said, the growth of cities in the world is very fast. It's clearly outpacing just overall population growth. This is why I always mention that some of the most rapidly markets in the world are not to be defined as national markets, right? So India is growing, sure. But rather as cities, right? So urban areas are growing, really fast. In India, for example, urban areas are growing much, much faster than the Indian economy as a whole, right? So this essentially represents, I think, a huge opportunity for all sorts of companies, because as you mentioned, there's a number of industries. You mentioned infrastructure, you mentioned waste management, and so on and so forth. I would also like to bring to your attention food and water. You see, when people live in the countryside, they consume food and water that is locally available. Once, if they're born in a city or they move to a city, you need to provide them with food and water, right? Security, I think, is a really important one because, of course, with this rapid urban growth, what we see is that cities are becoming dualistic in nature. So you have a whole bunch of urban residents that are doing really well and a whole bunch of others that are being left behind, and this creates a lot of tensions. So there's
an enormous number of opportunities, I think, for companies to think about what's going on in cities. And I think some of the most unique opportunities happen to be in the technology field. That is to say, how can we make life in cities better? How can we overcome some of the bottlenecks in cities? For instance, when you see a car driving in the average city in the world, 30% of the time that driver is looking for a parking spot, right? Well, there's got to be some solution to that, right? That may not have anything to do with building more parking spaces, but rather optimizing, right, the infrastructure that you have in place. So there's a number of ways to think about this, but I do want to emphasize that cities are one of the fastest growing emerging markets in the world. So don't think about emerging markets only in terms of national markets. Think also about these other dimensions to global markets.
Yeah, great insights. I think in New York, it's probably closer to 90% looking for parking. In fact, someone mentioned to me recently that they're building an underground park here in New York City, not too far from here. So TBD to see what that looks like, but perhaps another illustration of scarcity of resources and how to adapt to that. Yeah. You touched on emerging markets, and it's actually a theme that we discussed quite a bit this morning, thinking about mobile and how to appeal to clients. Which emerging markets appeal to you as attractive places to invest for exporters, and if you can give us a sense why.
Sure. So before I move into national markets, meaning different parts of the world, there's another segment like cities that I also want to emphasize, which is the population above age 60. Right. So every year that segment of the market is growing by 30 million people. There's an additional 30 million people somewhere in the world who are above the age of 60, and of course they continue to consume, right? But they buy different kinds of goods and services, and I always like to say that I think companies can make a lot of money if they think about how can they improve the quality of life of people above age 60, age 70, age 80, because that becomes the challenge for people in that age group eventually, right? It's the quality of life. They want to continue enjoying everything that they do, but they feel more limited as time passes, right? And I think there's a whole range of leisure-related, technology-enabled, activities, all sorts of things, products and services that can be sold to that demographic. Now, regarding parts of the world, I think, Asia is obviously going to become the center of gravity of consumption in the world, not just production, but that we should think beyond China and India. And then, in addition to that, there's also Africa, maybe emerging as a major consumer market in about 15 years from now. But this is the time to start learning about Africa. You see, you cannot wait until everything is ready for you, to jump into the market. You have to start learning about those emerging markets, let's say 5 or 10 years before they actually become attractive enough for you to make a move, right? So I would say that at the regional level, those would be, the single most important markets. But let's not forget about Latin America. Latin America itself is also projected to continue growing, although right now, the economic news coming out of the region are not excellent, especially from certain countries that will go unnamed, at least for now. But let's not forget also about Latin America. I mean, it has demographic momentum. It has, growth potential that is unrealized. And of course, it has, already an infrastructure in place for the consumer markets to grow.
Coming back to the over 60 piece, I think, again, a theme that you're illustrating here is segmentation, right? Yeah. So the products that you guys are exporting might mean something very different to someone who's 25 versus 60. And I think there's a lot of media attention on how do you work with millennials and how do you make your products attractive to millennials? But in fact, there's a whole other consumer base out there that is often perhaps goes unrepresented.
Absolutely, yeah. I didn't mention millennials because it's kind of obvious that you have to focus on them, especially if you want to maximize the lifetime value of a customer, right? So over 40 or 50 years. And of course, the younger generation, by definition, then, should be a focus, right, for every company.
Sure.
But yeah, going back to the 60 plus, I think, that is growing so quickly, and it has different preferences and different needs. And they do have money. And the interesting thing about that segment is that you find that segment growing very quickly in rich countries such as Japan or Western Europe. But you also see that segment growing very, very quickly in a place like China, yeah, right? Because of the one-child policy, because of the decline in fertility. So it's taking place both in rich markets and in emerging markets. So it's a segment that is, peculiar. Because again, I think it's driven mostly by the attempt to improve the quality of life or to maintain the quality of life. So it has similar characteristics in different markets, but you see it across different income levels at the country level, which is also very attractive, right?
Okay. Thank you for outlining that in more detail. Let's actually do a little bit of a roundtable around the globe. Start with Asia. Let's exclude, try to get this to go forward here. Let's exclude China and Japan, sort of as the two pillars of Asia. And when you think about Asian economies, which countries stick out to you as attractive opportunities?
Sure. So we have, I think, two sets of countries. So first we have India and the other economies around India. I want to focus your attention on India because India, within 15 years or so, is going to have a much larger consumer market than China. And few people realize this. The reasons for that are that India is going to have a bigger population. It's also going to have a younger population than China. And also the Indian economy grows mostly like the US economy through domestic consumption as opposed to exports and investment, right? So the domestic market for consumption in India is going to be eventually much bigger than the Chinese market, right? I mean, this is very clear. But then the other part in Asia that I think is really important is ASEAN, the Asia-Pacific economic space. They just agreed to creating something that comes close to what the NAFTA is, the free trade agreement of the NAFTA is, or something close to what the European Union was 15 years ago in terms of free trade. And here we're talking about Indonesia, Malaysia, Thailand, Cambodia, Vietnam, Singapore, so more than 12 countries. And together they have 600 million people, right? So granted, China is more than twice as big. India is more than twice as big. But you know what? Consumers in those markets are way richer on a per capita income basis, right? Because Thailand, Malaysia, they've been growing rich for a much longer period of time. So actually, those 600 million people in ASEAN, right, in Thailand, in Malaysia, in Cambodia, and Vietnam, they may be generating more business, right, for global companies in the next 5 to 10 years than the entire Chinese market or the entire Indian market. So I think it's important to keep in mind that there's other places than China and Japan in Asia. Right?
Absolutely.
Absolutely.
Let's focus on China for a moment. Jay actually mentioned it in his introductory remarks. I'm going to cite another fact here just to set some context. So in 1979, trade between the U.S. and China was $2 billion. In 2014, it was $579 billion. But perhaps for many companies in this room and many companies globally, exporting into China might feel more like a myth than a reality. Yeah. What's your take on that, and is China indeed an attractive?
Well, it's difficult. I mean, you see, the trouble with both China and I will also add India, right, is that there's so many obstacles. I mean, it's really difficult to actually enter those markets and operate over there. I mean, a lot of companies have tried, and not all, but many have failed, right? So you have to be careful. Why? Well, because the distribution channels, because are difficult. The consumers have different characteristics, but also because there are local competitors that are quite strong, right? And that adds to the difficulty. So sure, China is a very attractive market. I think what's really important is to segment it, right? So China is also an overwhelmingly large market, right? And let's not forget that they do have very capable companies, right? So it's a market that perhaps is ripe for collaborations as opposed to go-it-alone strategies, right? So you have to think carefully about, first of all, whether you want to spend all of the time and resources to be successful in that market, and secondly, maybe you need to realize that you cannot do it by yourself, right? And I think that's also true of India.
Great insights. And a great segue into India. You've mentioned in your remarks already the pace of India's growth, domestic consumption, and some of the sort of telltale indicators that make it a very attractive market. Someone cited earlier today in one of their presentations that they just passed the 1 billion smartphone number of users in India. So only China and India have more than 1 billion smartphone users. How else should we be thinking about India in terms of what kind of opportunities are there?
No, I think India, from the point of view of using digital distribution channels, and it's a great market. You take a look at, for example, financial services, and India is one of the countries in the world in which a greater proportion of the population actually uses mobile banking, right? Which is, as you know, here in the United States, is no more than 15% or 20% of all of the transactions. But in a place like India, it's way more than 50%. The country in the world that has the highest percentage is actually Kenya, because they totally leapfrogged, right? I mean, they went from having no fixed telephone lines to having cell phones, and then they took it from there, right? So no, the Indian market is just fabulous from my point of view. Just to give you another factoid, and this is really a factoid, there's more people in India with a mobile phone than people with access to a toilet, right? Which, by the way, is a great opportunity if you are into the sanitation business, right? A student of mine who happens to be from India actually is launching a startup that has to do with providing very affordable sanitation equipment for places where you don't have a connection to the sewer, right? I mean, that's the challenge, right? That you have all of this urban growth, but you don't have the infrastructure.
Of course.
So no, I mean, India is paradise from the point of view of an e-marketer. India is paradise because, once again, there's all of those phones, but also people are used to using the phone for procuring certain kinds of services, for making purchases. And that's not the case in other parts. If you're interested in healthcare, I think that's another very important industry that's going to benefit from this. So the provision of certain kinds of healthcare services, obviously not surgery, right, over the cell phone, right? I think that is also gathering speed in many parts of the world, especially primary care and follow-ups. And in a place like India, where still people have in some areas, like in rural areas, they have to get on a bus for a couple of hours in order to get to a doctor. That's also true in sub-Saharan Africa, right? In many parts of sub-Saharan Africa. I think new technology, mobile technology, can play a very important role. So be creative. I mean, it can be, it can have applications across many different kinds of industries. In fact, I think that every single product or service can be, sold very successfully in some of these markets, like India, through a digital platform.
So interestingly enough, the restroom has been a theme today, with the Japanese being cited as Japanese teenagers liking to take their cell phones in the shower because they're waterproof, and now we have to find some way of reconciling infrastructure in India so that people can actually take their smartphones to the restroom there too. I digress. Let's refocus here for a second. Let's move to Africa, a place that you just recently returned from. In fact, we talked on the phone from there last week. A lot of infrastructure investment in Africa, particularly from China and other major economies. How attractive is Africa? How should we be thinking about it? You mentioned 15 years, this massive marketplace. Start doing the due diligence now. Help us understand that a little bit more.
Yeah, so I think I would make perhaps 3 points, right? So the first is Africa is a huge place. So it's very difficult to generalize, right? The good news is that if you focus on just 3 or 4 markets, you are already selling in like 80% of the entire African economy. So Nigeria, South Africa, Kenya, maybe Tanzania, and that's already like 70–80% of all of the purchasing power in Africa. Africa is a huge place. When you think about it geographically, China, the U.S., Western Europe, Japan, Mexico, and India, they all fit into Africa, right? I mean, not population-wise, but rather in terms of geography. Secondly is, as you mentioned, yes, the infrastructure is not there yet. But you see, that's perhaps when you make more money, right? If you are creative, or if you use the digital platforms that are emerging, especially in places like Kenya, Nigeria, Senegal, and so on and so forth. They're at the forefront in the development of this. In Kenya, more than half of the population uses the cell phone. And they have cell phones, not smartphones, right, for the most part, for moving money around, right? And then the last thing that I would mention is the point that I made earlier that you alluded to, which is don't wait until the market is ripe, because then you're going to be late, right? So establish a listening post. Acquire an option to later, do something really quickly, right? When you see that the market is really starting to grow. We see the beginnings now of a middle class in some of these markets in Africa. It's still relatively incipient, but within 5 years or 10 years, it's going to be a very different story. So this is the moment in which to go, to start meeting people, to start establishing relationships. I personally try to go a couple of times a year because I think that's going to be, Africa is going to be the next big thing. And keep in mind that Africa, by the year 2030, so within 15 years, will be the second most populated part of the world after South Asia, right? As you know, China and East Asia are declining, right, because they're not having enough babies. And Africa very soon, I think, will be possibly the number 4 region in the world in terms of purchasing power, because they're going to have a very large population. Right?
Yeah, and one theme that we've hit on today, too, through our mobile discussions is often for many of the consumers in Africa, their first exposure to the internet and buying and consumerism is through a mobile phone.
Absolutely.
You want to comment on that or anything?
Well, yes, because they don't have a laptop computer, they don't have an iPad, they don't, they don't have a tablet, they don't have a...
That's okay.
They don't have That was intentional. They don't have a fixed line infrastructure in place. But let's not forget, in the world, the country in which has the highest proportion of the population with a smartphone is possibly South Korea, and that's only like 70%, 75%, right? If you go to India, you go to China, you go to Sub-Saharan Africa, it's really less than a third of the population. In Africa, it's less than 5% that has a smartphone. This is going to change very quickly over the next 5 to 10 years, and that's why I think it's important to go now, right? But for the time being, sure, they're using SMS messages. Of course. They're using older technologies, but for them it's great. And also, let's not forget that in many of these countries in Africa, people share a phone. So the phone statistics that you see out there are not accurate in the sense that they underestimate how many people are actually using the cell phone, right? Because family members or friends share the same device, right? Because for them it's still expensive. Of
course. Yeah. Thank you for enlightening us and really helping us understand, I think, a region that is increasingly becoming more competitive and attractive. Let's put the sort of the magic hat on you here, the sorcerer's hat, and look ahead a little bit. We're 2 months into 2016. There's been some indicators, perhaps a little bit of uncertainty. Obviously, U.S. presidential election looming. What's your take on global economic activity over the next 12 months? And related to that, what's unique about 2016, or what could be unique about 2016 from that?
Yeah. So as you're saying, I think there are a number of question marks as to what's going on in the global economy. Starting with China. So we don't know exactly how many problems they're confronting in the financial sector, to what extent the economy is going to slow down, and that is essentially having very negative effects in commodity exporting countries, especially Latin America, but also Africa. So we have that's one source of uncertainty. The other big source of uncertainty is Europe, because as you know, we both know, there are many problems over there. And adding to all of the pre-existing problems, now you have the refugee crisis. But the basic problem is that the economies are not growing. And right now, Europe continues to be about 22-23% of all consumer demand in the world. So this is a big problem, right? In the United States, fortunately, I think things are going relatively well from an economic point of view. The economy recovered relatively fast, not as fast as one would have preferred, but relatively fast from the crisis 8 years ago. But the problem, as you say, here is political uncertainty, right? Yeah. And I guess yesterday we got a little bit more clarity on one side, the Democratic side, but not that much clarity yet on the Republican side. And unfortunately, I think the next few months are going to be adding to that uncertainty. The problem with political uncertainty is, of course, that certain kinds of markets freeze, right? So government procurement freezes, right? Yeah. And a lot of companies that depend on government contracts, and in contemporary economies, that's a large chunk of the business sector. Then essentially they have to wait, right, until the political situation resolves itself. So unfortunately, yes, uncertainty is a big problem. So how do you deal with uncertainty? That's the next big thing, right? So once again, don't run yourself into a corner. Open up options. Do not make all of the investments at once, right? Unless you're absolutely certain that they're going to work. But if there's a lot of uncertainty, you should be more incremental. You should acquire options. You should keep the doors open. You should never get into an investment project unless you have a way of getting out of it, right? Or unless you have a way of reorienting, what you're doing. So always look for flexibility when there's a lot of uncertainty, whether it is geopolitical uncertainty or political uncertainty in terms of elections, or whether it's economic or financial uncertainty.
Yeah. So we come back to this theme of having a clear strategy, but having enough flexibility and being nimble enough to adapt to whatever climate may present.
And if I may add, I think this is particularly important with relatively young companies, because I think there is this culture among young companies that what works is that you have to place a big bet, right? It's like you have to have a vision and then you have to go, full force, right? Thinking that, well, if it works, that's wonderful. If not, I have really very little to lose, so I'll just try again, right? And it is true that there is this phenomenon of the serial entrepreneur, right? So the entrepreneur that keeps on trying and eventually. But one has to be careful, right? Because you see, in the United States, I would say, there is a culture of failure in the sense that, if you fail, you're not stigmatized, right? But I don't know Canada enough, and I'm assuming that it's a very different country from the United States, right? That's what people, my students at least, say, right? But in Latin America, which is a part of the world that I know better, and also I think this applies to East Asia as well, the culture is not as forgiving when you fail, right? As it is in the United States. Sure. And therefore, you have to be a little bit more careful. And you want to avoid being stigmatized because, oh, you failed, right? In the United States, you failed, and you can recover from that. And in fact, you're expected to fail as an entrepreneur. So I think taking into consideration these cultural values and expectations as to how quickly as an entrepreneur you're supposed to be successful under conditions of uncertainty, I think is really important also to keep in mind.
Yeah, and I think it speaks to some of the themes that we've talked about today is when you're going into a new market, doing that in a thoughtful way, really doing your due diligence. Certainly you can never anticipate every curveball that's going to come at you, but doing that in a way that resonates with local markets and a deep respect for those customs and those cultures too.
That's right.
Well, let's stick with the kind of the looking ahead. We've talked about some industries that become even more significant in the years ahead, but when you look at current and future global expansion trends for the next 1, 5, 10 years, you can put your own time frame on it. What do you see?
Well, I see in the next, really 5 years. I mean, you don't have to look any further, or 3 years even. I see that some of these trends that we've been talking about that have been going on for a long while are going to start becoming a reality, right? So the growth of some of these segments that we alluded to, the global middle class in emerging markets, the population above the age of 60, big cities growing. There's one that I would also like to add, which is women. So women live longer, as on average. I cannot make any promises to any one of you in particular here in the room, but on average, you do live longer. And also women now in most parts of the world have much, much better professional and job market opportunities than they used to have. And so we're seeing that although there is some discrimination, that women are accumulating, they're making money and they have their own jobs and they're accumulating wealth. And this is also, again, another type of consumer, right, that is emerging. And it's in fact, according to my own calculations, the segment of the market that is growing the fastest. And women have different preferences also, right? When it comes to goods and services. And don't think only about the cliches. Think, for example, about the fact that women prefer to spend more money on healthcare, not just for themselves, but also for their children and their grandchildren. They prefer to spend more money on education. They prefer to spend more money on insurance of all kinds. They prefer to spend more money on certain kinds of goods and services. So I see that as a trend that is already happening right now. Yeah. And that, I know a lot of companies that are very busy now trying to capture that market, right? And they've realized that their product lineup is not appropriate for those new markets, right? Sure. So I think that's what's really important. But looking farther down the road, I think we go back to the geographies. And again, I think India is going to be really important in 15 years from now. I think Sub-Saharan Africa is going to start being important in 15 years from now. And yes, the Middle East, Latin America, China will continue to be important, right? But I think we should also pay attention 15 years down the road to these other emerging markets.
Do you see any industries in particular that are facing really competitive pressures right now that could potentially expose them a little bit later?
Well, I think every industry is under a lot of competition, but of course the ones that have fewer barriers to entry, or the ones that are more easily disrupted by new technology. Quite frankly, I think one that is just ripe for disruption is financial services. And financial services is a big industry that has many connections, and we all need money and we all need credit. And there's many technology applications. I think another one is healthcare. And the third is education, right? You talk to my colleagues at the Wharton School or at Penn, and almost nobody's interested in doing online education, right? Because we are the most recalcitrant, beings in the world. I mean, faculty are just, very antiquated, right? By definition, right? I mean, we have a job for life, and all of those things. So I'm one of very, very few people who have actually gone into online education, right? I think it's the future. It's disruptive, but it's the future. So I think, especially the service sector, I think in the tangible goods sector, manufactured goods and all of that, technology has already had a large impact. But I think in everything that has to do with the services, which of course in a place like the United States is like 70% of the economy, right? Yeah. We're gonna see a revolution because there's so much inefficiency in the service sectors, right? In education, in healthcare, in financial services, in leisure, in entertainment, in all of those industries, there's so much waste, right? So I think that technology is gonna have a huge impact in that.
Yeah, we're seeing that on a daily basis, and It's going to be very interesting to observe this as it manifests over the next few years. So November is 8 months out. There's that first Tuesday that's pretty important. How are trade?
It's also Thanksgiving. Anyway.
That's true. That's true. I shouldn't get ahead of myself, right? Some people might be giving more thanks than others at that time. How are trade and consumer behaviors affected, particularly it's just sort of the lens of global expansion during a U.S. Presidential year?
Well, I mean, this presidential election, as you know, I mean, just focusing on, I think, one of the most surprising, aspects of it is that it has put U.S. trade policy on the table, right? Not since the early 1990s, when Bill Clinton was elected in '92, was trade so prominent, right? And the reason it was so prominent back then is because the U.S. and Mexico and Canada were negotiating NAFTA, right? Of course. That was in the early 1990s. So now suddenly trade is again on the agenda, right? And it's on the agenda for both parties, right? And even the most mainstream, the most moderate candidates, right, have had to add trade, right? And they're on the defensive, right? Because they're being attacked, from the extremes, right? Either extreme. I'm not going to mention the names, just not to give them any publicity, any further publicity. But that's the problem, right? And the issue with trade is that, I would mention two things. One is that, yes, trade in general is good for everyone, but there's always winners and losers, right? Even companies, right? I mean, some companies lose out, others win. But secondly, what really, really is important is to have consistency when it comes to trade. I mean, what nobody should be asking for is that, oh, we have 10 years in which we have a lot of free trade, and then, oh, we close the doors and we have very little free trade. You want consistency over time, right? And this is especially, I think, the case for smaller companies or emerging companies, such as the ones represented here in the room. What you want to know is, are the rules of the game going to be, more or less steady, right? Constant for the next 3 years, over the next 5 years. So I think the current presidential cycle now is, electoral cycle, is very dangerous because it's generating a lot of uncertainty as to what is the United States going to do. Yeah, sure. Are they going to put all of the new trade agreements, including the Trans-Pacific Partnership, on hold? Is NAFTA going to be, scaled down? What's going on, with potential protectionist sanctions or actions? I mean, and for a small company, if you get caught in the middle of something like that, it can be devastating, right? You see what I'm saying?
Of course.
So it's a major source of uncertainty. So we will know by November who wins. Hopefully, we will know, what remains on the agenda in terms of trade. But I think everybody here in the room should have an interest in no drastic changes, right? That's, I think, the most important thing. Yeah. If there's a change, towards freer trade or towards less free trade that is relatively small, okay, we can cope with that. But certainly nothing that is too dramatic.
Sure. Right? Great insights. Thank you for unpacking that. We've reached the bonus round. You've earned a bonus. You've done an exceptional job.
Surprise me now.
You're in Pennsylvania. You are a researcher by trade and an educator. So if you had no constraints on your budget or your time, is there a discipline or an area or an issue that you would be very keen to be researching right now?
Yeah, with no limits
no
on
limits.
Resources or time,
Correct.
My time, or just...
Time, money, none of that is an issue.
Yeah, I think, I think really the issue of our time, for the next, few years, I really believe that it's going to be, removing the remaining pockets of poverty in the world, and also trying to redress inequality, right? And you can do that in many different ways. You don't have to do that necessarily by taxing, the rich more, but you can perhaps use technology. You can have businesses, focusing on that problem. To see if we can, lay the foundations for having a more prosperity, right? That is widely shared by a lot of people around the world. You see, the problem with poverty and with inequality, all of these things, is that when you want to study it, or even worse, when you're a policymaker, either in government, at the World Bank, or at a private company, and you want to improve conditions, you get this syndrome that you feel that you're in possession of the truth. And first of all, you know what the poor people want, and secondly, you know how to give it to them, and you understand all of the effects that it's going to have. And that's, of course, a fallacy, right? Or a set of fallacies. That is to say that, of course, we don't know what the poor want, right? Of course, we don't exactly know how exactly, to satisfy the needs that they have. And we don't know what the consequences will be, right? But I think, there's going to be a lot of interest, I think, in the next few years to address these problems. And I think this also represents a great business opportunity, right? To see how we can come up with new creative ways of leveraging technology or leveraging what we know to try to address, this lingering problem, right? I mean, we've been 300, we've had the steam engine and the railway for 300 years now, or 250 years now, right? And the jet engine for 60 years, and we still have poverty in the world, right? So if I had unlimited resources, I would love to, be able to study how can you address that, and to see how the business sector can play a role in that. Right?
Well, it's very interdisciplinary in nature.
Yeah, absolutely.
And I think you're well positioned between being at that intersection of economics and sociology. Fantastically done. Yeah, that finishes the 13 questions, but we do have a nice chunk of time left to open it up to the audience. Kate, to my right, and Ben, to my left, have mics. I would ask again, raise your hand, identify yourself, your name, where you're coming from, and whom you work for, and we'll go from there. And if you could stand, please.
Oh, hi. Heather Battison. I work with TransUnion, the credit bureau.
Okay.
I am challenged with the task of growing our direct-to-consumer businesses in India, South Africa, and Hong Kong, 3 completely different markets. Since you just got back from Africa especially, I'm curious of your thoughts, particularly as I'm building an e-commerce subscription product. What are your thoughts on alternative payment methods, especially in South Africa and India, where they do everything from pay with cell phone credits to debit orders?
Yeah, so that's a great question. And again, I mean, those markets are right now at the forefront, right, in terms of deploying these types of technologies. In many of these markets, you do have already in place a payments infrastructure that seems to be working, at least for the time being, right, and meeting all their goals. And now the name of the game, I think, in some of these markets, especially in places like South Africa or Kenya, has become, in India, what value-added services can you offer, right, through that platform? And that would include all sorts of things, ranging from, as I mentioned earlier, e-commerce, but also education, healthcare. And by the way, assessing credit in those markets, I think that's a huge opportunity for companies such as yours, because that's missing, right? I mean, that's a peculiarly American invention. And as you know, the culture of lending in many parts of the world is based on collateral, right? So I only lend you money if you have a cow, right? And if you don't give me the money back, I take the cow, right? So collateral. And moving on to a culture that is more about creditworthiness requires a number of institutions and various pieces of infrastructure to be put in place. So again, I think the name of the game is now value-added services, both for the consumers, but also for the companies that want to. So don't think that your only customer could be the end consumer, but also the companies that want to use that infrastructure. And quite frankly, at least in the case of Kenya, but also in South Africa, but even more so in Kenya, I would say, the opportunities, right, are just enormous, right? Because these are economies that are growing pretty fast. I forgot to mention earlier, out of the 20 fastest growing economies in the world right now, half of them, 10 of them, are in sub-Saharan Africa, right? And Kenya is one of them, right? So there is clearly an opportunity there. And you have all of these people who could become, in the next 10 or 15 years, middle-class consumers. And let's not forget, middle-class consumers buy branded goods. They like to buy a car. They go on vacation. They like to get credit. They like to send their kids to school, and so on and so forth. So the more of these people become middle-class citizens, right, consumers, the more opportunities there will be.
Heather, do you want to point out as well, that's payments around the world, and which countries and which partners are working in those countries is an area of analysis that we've spent a lot of time on.
Yeah.
So when we're building out sort of go-to-market strategies for South Africa, we already have that sort of intellectual capital to say, here are the 3 players in that country. So please do connect with someone from the team at some point today, and that is something that we can share more insight on.
And by the way, target women.
Yeah.
especially in those markets. I'm totally serious. But you know why? Because many of them are, small entrepreneurs. So they have a little store in the marketplace, or they have this, or they have that. And they are right now one of the fastest segments, for the market in many of these countries in that part of the world.
Great question, good insights. Let's take one from the left side or the middle. Just by show of hand. All right, then we'll open up the right side. This gentleman in the front right here, please, if you could just identify yourself.
Hi, my name is Robledo. I'm with Endurance International Group, provider for online presence for small business around the globe.
Insurance, you said?
Endurance International Group.
Endurance, okay.
Yes, we have online hosting products, email products, site builders, and stuff like that. Can you give us some color about the Russian market? It's something that we're looking at right now. Thank you.
Okay, so the Russian market. It's funny because whenever I don't mention Russia, there's always somebody who asks me about Russia, right? And so let me first start by saying that Russia is a very important country, right? I mean, it's very important for a number of reasons. One of it is that geopolitically, because of the geography, like, no country in the world has borders with more other countries, right, than Russia. But also because of the Arctic, right? With global warming, Russia controls 40% of the Arctic region, so it's going to be really important. But in terms of Russia as a market, right now, it's kind of, difficult because of the collapse in the price of oil, and also all of the turmoil, right, and the difficulties with the political situation. Another very peculiar thing in Russia, as you know, is that the males, the men, die very young. And you know why, right? So this is very well documented, right? So there is a very, very kind of interesting dynamic going on over there, right? Because you have this very large gender imbalance, which goes in the opposite direction than the Chinese gender imbalance, by the way, right? In China, what you have is fewer women than men, right? In their 20s or 30s. In Russia, it's just the reverse. So Russia is a relatively large market. That is very polarized, right? So you do have a very important market at the top, right, of relatively wealthy people. I know entrepreneurs who have made it big with that segment of the market, right, in Russia, or also catering to their needs in other locations because they frequently buy, real estate or whatever in other parts of the world. But other than that, I mean, I wouldn't put Russia as one of the top 10 markets for the next 5 or 10 years. But it is an important market. Now, having said all of that, you need to have, some thorough knowledge of how things work over there, because it is a very peculiar place in terms of, getting licenses, and you can be very easily taken for a ride, right? So you have to be very careful. It's a very, difficult market from the point of view of how you deal with government entities, how do you deal with potential business partners. There's not a lot of transparency. Let me put it that way.
Yeah.
Right.
It's Javier.
Hello, Javier. I'm from Google Mexico. One quick question. First, a little fact. In the LATAM region, more than 100 million people are going to be online in the next 2 years through their mobile phones.
Right.
Considering that, could you highlight, business-wise, a challenge or an opportunity throughout the region?
In Latin America?
Yes.
And that's, of course, additional consumers, right?
Yes.
Who are going to be
Yes.
online. No, that's tremendous growth. So that's why I added Latin America to the list of the top 5 regions in the world. I mean, there's no question about that, right? You have another advantage when it comes to those kinds of platforms in Latin America, which is that you don't have to do, a lot of localization in terms of language, for instance, right? And if you remember, Netflix, and maybe I shouldn't mention this company either, but they just expanded, to a number of countries around the world. But Latin America was one of the first parts of the world in which they expanded, and that was because, the need for localization wasn't that big, right? So I mentioned earlier that ASEAN, Southeast Asia, that's 600 million consumers, and Latin America is about the same number, right? But then you don't have the extreme diversity, cultural diversity, linguistic diversity that you have in Southeast Asia. So that's really, really good, right? So the problem in Latin America, as you know, is the volatility, right, in the business cycle, and how crazy these things, how quickly they change. And right now, the problem is that Latin America has become, most countries in the region, especially South America, Peru, Brazil, even Chile, right, very sensitive to the commodity cycle, right? And as you know, for many of these countries, China has become the most important trading partner. So I always say, if you want to really see what might be happening in Latin America from today's standpoint, let's say in the next 2 or 3 years, since we have two eyes, you should set one eye on the US dollar and the other eye on China right now, right? And that will give you a sense as to how things might evolve, right? And then, of course, hopefully some of the political problems and especially the scandals will go away, right? But that's also having a large impact right now, at least in some countries. But no, the opportunity is tremendous. And again, the beauty of it is that you don't need to engage in as much localization if you're using a platform. And then adding to that, by the way, several of the telecommunications companies, right, have a presence across many of these countries, which is also great, right? Because you can always enter into agreements with them, right? And that is something that is relatively unique to Latin America. This doesn't happen, well, Latin America and Northern Africa. Also in Northern Africa, you find that the same telecom firms have a presence across many different kinds of markets, right? And parts of the Middle East. But other than that and that part of the world and Latin America, that is not the rule. That is not the norm in other parts of the world, right? So those are advantages, I think. That means that the markets, there are not so many borders, right? Or so many obstacles, right? Separating the different markets.
Thanks, Javier, for helping us zoom in there. With time for one more question.
Hey, I'm Ryan with DigiCert. We're hearing about these emerging markets and opportunities that are happening within the next 5, 10, 15 years, but which ones are wrapping up maybe in the next 5 years that if you were going to jump on, it's like it's time's running out type of a deal?
Yeah. No, all of the above except for Sub-Saharan Africa. So Sub-Saharan Africa, unless you're doing something really specific, like in the first question that we had, right? Unless it's like something really specific for which Africa is already has already taken off, I would say Sub-Saharan Africa is 5, 10, even 15 years from now, right? I mean, for most companies, really, right? But other than that, all of the other global segments that we discussed, the population above age 60, women with money, the big cities, and the middle class in emerging markets, all of those things right now, those are markets that are not only growing very fast, but they're also big enough to justify your attention and to justify, investing resources in them, right? And the same goes for some of the geographies that we've been discussing. I think right now, quite frankly, not only because I just came back from also from Malaysia, but I think Southeast Asia, with all of these new agreements to remove barriers to trade, and that you have clearly the beginnings of a market there with no trade barriers that contains 600 million people, right? All of those things are things that either you act on them now, or you're totally going to be late, right? You're going to be late in the game, right? For each of those that I mentioned. I think the only exception is Africa. For Africa, you need to wait a little bit more, but you need to go there. You need to learn about it. You need to establish relationships. You need to start thinking how you might want to play over there.
Yeah, Jay, go ahead, please.
So I'm glad to see you spoke about lifetime value a little bit earlier. And I think with us, and me being a Googler and the conversations I've had over my lifetime with customers about lifetime value and cost of acquisition, can you talk a little bit about, you talked about millennials being like, get their longer lifetime value. So a lot of our customers might think about it as 12 months, maybe 3 years, some of them that day, right? Yeah. How do you think about lifetime value if you were advising on even as you cost to acquire longer term?
Right. No. So this is a methodology, right? It's a way of thinking about your customers. And again, the assumption is that, it's two assumptions. The first one is that not all customers are the same, right? And the second one is that you shouldn't be or feel obligated to serve every customer out there, right? You should be in a position to pick and choose the customers that you think are going to give you the greatest lifetime value, right? Over a number of years, right? And so therefore, the game doesn't become to be nice to your customers. That's actually a mistake, right? You shouldn't be nice to your customers. What you should do is identify the customers who are really willing to pay for what you have to offer them, and also think about the customers that are not willing to pay as much, right? And then differentiate between the two, right? And so a smile is not enough, right? I mean, you need to go into the analytics. You need to, do a lot of research and understand your customer thoroughly. But when it comes to the methodology itself, of how you calculate this thing, you need to take into consideration 5 essential things, right? And you've mentioned, I think, 2 or 3 of them. I'm not sure whether I'm going to be able to produce right now, in the spur of the moment, all 5 things, but let me give it a try, right? So one is how much money you get out of the customer minus the variable cost. That is to say, how much does it cost you to serve that customer, right? Then there's the cost of acquisition of the customer, the cost of retention, and the 5th very, very, very important factor that we cannot forget about is the probability of retention. And that's what's peculiar about the millennials. For the millennials, the probability of retention so far appears to be much lower than for previous generations, right? So you've got to be careful with millennials, right? Because maybe you invest a lot of resources and money trying to bring them, into your, to have them as consumers. And then, but the probability of retention is only 10% or 15%, and you lose them 2 years later. And that's really bad, right? Because you spend all of this money, right, trying to attract them. So those are the 5 key factors in the methodology, right? So I'm not sure whether I answered your question, but it's really important to first realize that you're not in the business of being nice to your customer. You're in the business of adding value to your customer. But you should always keep the right, to choose who is going to be your customer. You don't have to serve everybody out there. In fact, that is the fundamental premise underlying segmentation, right?
Yeah, of course.
You segment the market so that you can pick and choose, right? And of course, the global market is way too big anyway, right? Except for Google, right? For Google with some of their products, right? Search engine, right? Because you do not have like you cannot reach every consumer with all of your products, right? But for some of them, you've managed to reach like the vast majority of consumers worldwide, right? So very few companies actually get to that level, right? For the rest of us, segmentation is really important. But even for Google, right? Segmentation is very important. So that's what I would emphasize, right? And then really think very carefully about those 5 drivers of lifetime value of the customer to your company, right? And see whether it compensates or not. To pour all of those resources into, that category of customers.
If I can, Mike. Just an add-on question, because I see the clock. I see we have 14 seconds. You talk about retaining millennials, and that's especially a challenge. You talked with Heather about what you thought value adds would be in the market she's going in with TransUnion. What do you think would help assist retention with millennials? What type of value exchange?
Yeah, gosh, I have to deal with this every day because I essentially deal with, very young people, right? And millennials, and then what is the name for the next generation that is coming after the millennials?
Not millennials.
Not millennials, right? The next wave, because I teach in the classroom and I have undergraduates and so on and so forth, as well as graduate students. And what I've noticed is that, and this is what I tell banks, by the way, who are having a lot of trouble dealing with millennials, because millennials don't want to go to a branch, right? They want to do everything with their smartphone. And what I tell them is, look, this is what I have to do. It's just you have to keep them entertained, right? They have a very short attention span. And they're very, and forgive me for using this term, promiscuous. They like to, try out many different kinds of things, and they rotate in and out of relationships with companies and so on and so forth. So that's a challenge, right? You need to, first realize whether it's worth your while to sell to that market. Most of the time, the answer is yes, because, they're young, so they're going to be around for a long time. But secondly, then, you really have to look for ways to keep them interested, right? And again, that may help you increase the probability of retention. It's going to be yet another cost that you're going to have to assume. But oftentimes, companies don't have an option, right? I mean, if you want to play in that space, then you need to, spend the additional resources. But I think the key, at least from my perspective as an educator, is you need to keep them entertained. It's just that, I've had to re-engineer, my entire lecturing, style. I used to lecture in a totally different way 20 years ago, and now, if you tell them that you're using PowerPoints, they'll say, PowerPoints, that's like 20 years old, right? I mean, we want videos, we want, whatever, virtual reality, we want all sorts of things.
The next best thing.
Absolutely.
Well, you've given us so much to consider as we go forward on this journey. Please join me in thanking Professor Guillen.